You walk into a car dealership. You found the car, the price works, the monthly payment is manageable. You sit down. The finance guy types your name into the system. He turns the screen toward you. Your credit score is either too low or it does not exist. He gives you the look. The loan gets denied, or the interest rate is so punishing the car now costs you 40% more than the sticker price. You walk out with nothing. That same moment happens when you apply for an apartment, a business loan, a phone plan without a deposit, a credit card with actual rewards. Your credit score is a gate, and if nobody handed you the key, nobody tells you how to make one. Today, that changes. This is the cheapest way to build credit from absolute zero. No cosigner, no rich relative, no existing history, just the exact steps in the exact order. Part 1. What credit actually is. Credit is a track record, nothing more. Lenders cannot look you in the eye and decide if you are trustworthy, so they look at your history. Have you borrowed money before? Did you pay it back on time? 3 major bureaus collect that data: Equifax, Experian, TransUnion. Your FICO score is what lenders use to make decisions about you. It is built from 5 things. Payment history is 35%, the biggest factor by far. Amounts owed is 30%, how much of your available credit you're actually using. Under 10% is ideal. Length of credit history is 15%, how long your accounts have been open. Credit mix is 10%, having different types of accounts, cards, loans, helps. New credit is 10%. Too many applications in a short window hurts you. 5 factors. Now you know exactly what to build and what to protect.
Part 2. The trap. Here is the problem nobody warns you about. You cannot build credit without credit, but you cannot get credit without credit. Apply for a standard credit card with no history? Denied. Apply for a loan with no history? Denied, or the rate destroys you. The system assumes you already had a starting point, a parent who added you to their card at 18, a student loan that opened your file, a family member who helped you get a secured card. If none of that happened, you are starting from a position the system was not designed for. But there are 3 legitimate doors into this system. Almost no cost, almost no risk. Most people only know one of them. Part 3. Door 1. Secured credit card. You deposit money with a bank, usually $200 to $500. That deposit becomes your credit limit. You now have a credit card backed by your own money. You use it for one small recurring charge, a streaming subscription, your phone bill, something under $20 a month. Then you pay the full balance every month before the due date. The bank reports your payment behavior to all 3 bureaus. After 6 to 12 months, your score appears. Then it climbs. The cost to you is 0 as long as you pay in full. No interest, no fees if you pick the right card. The best options right now are Discover It Secured and Capital One Platinum Secured. No annual fee, both report to all 3 bureaus, both upgrade to unsecured cards after responsible use, meaning your deposit comes back. $200, no annual fee, 6 months of on-time payments. That is the price of entry. One rule: never let your balance exceed 10% of your limit when the statement closes. On a $200 limit, that means staying under $20. Pay in full, keep utilization low, never miss a payment. Part 4. Door 2. Credit Builder Loan. Most people have never heard of this one. A credit builder loan works backwards from a normal loan. You do not receive money up front. The lender holds it in a locked savings account while you make monthly payments toward it. When you finish paying, you get the full amount back. You are paying yourself while building a payment history the bureaus can see. Monthly payments run between $15 and $50 depending on the term. Some charge a small administrative fee, usually under $30 total. That is your only real cost. Where to get one? Credit unions, community banks, or online platforms like Self and Credit Strong. No credit check required. The advantage here is that it adds installment loan history to your file. A secured card is a revolving account. A credit builder loan is an installment account. Having both builds your credit profile faster than either one alone. This is the two-door strategy. Secured card plus credit builder loan, under $50 a month combined, a real score inside 12 months. Part 5, Door 3, Authorized User. This one is free. If you have a family member or close friend with good credit, someone who pays on time and has had a card open for several years, ask them to add you as an authorized user. You do not need the physical card. You do not need to use it at all. Simply being listed means that account's history shows up on your credit report. 7 years of their perfect payment history becomes part of your file within 30 to 60 days. The risk to them is minimal if you never touch the card. The benefit to you is real and immediate. If that person exists in your life, have the conversation. Tell them honestly what you are doing. Most people who have been through financial hardship themselves will say yes.
Part 6. The exact order. Month 1. Open a secured credit card with no annual fee. Deposit $200. Set one small recurring charge. Set up autopay for the full balance. Do not touch it again. Month 1 simultaneously. Open a credit builder loan through a credit union or Self. Set up autopay, $15 to $30 a month. Month 1 simultaneously. If the authorized user option is available, pursue it now. Months 2 through 6. Do nothing. Let autopay run. Apply for nothing else. Every new application is a hard inquiry that temporarily drops your score. Stay patient. Month 6. Check your score. Starting from 0, you are likely between 620 and 680, possibly higher if the authorized user history was strong. Month 12. A full year of clean history. Your score is likely between 680 and 750. You now qualify for unsecured cards with real rewards. Your deposit comes back. The credit builder loan pays out. You have spent almost nothing. You have built something that will save you thousands for the rest of your life. Part 7. The 4 mistakes. 4 mistakes quietly undo months of work. Missing one payment. Payment history is 35% of your score. One missed payment can drop you 50 to 100 points and stays on your report for 7 years. Set up autopay. Never rely on memory. Maxing out your card. Even if you pay it off monthly, a high balance when the statement closes shows high utilization. Keep the reported balance under 10% of your limit, always. Applying for too many accounts at once. 5 applications in 30 days looks desperate. It costs you points. Open 1 or 2 products and stop. Let time do the work. Closing your oldest account. Length of history is 15% of your score. Keep your oldest account open even if you stop using it. One small recurring charge and autopay. An old account with age is valuable even when it feels unnecessary. 4 mistakes. All avoidable, all common.
Final message. Let us put a real number on what you just learned. The average car loan in the United States is around $30,000. With a score under 600, your interest rate might be 15 to 20%. You pay roughly $12,000 in interest over 5 years. With a score above 720, your rate drops to 4 to 6%. You pay roughly $4,000 in interest. Same car, same income, $8,000 difference just from a number attached to your name. Now apply that math to a mortgage, a business loan, every major financial decision ahead of you. The secured card deposit is $200. The credit builder loan is $15 a month. The return on that is measured in the tens of thousands. Here's the truth nobody says out loud. This system was built by people who already had credit, for people who already had credit. If your family had money, you started with a score. Doors opened. If they did not, you showed up to the game without a ticket. Now you have one. $200, $15 a month, 12 months of patience. That's the price of a door that was never supposed to open for you. Pay it, build it, and remember, the people who benefit most from you not knowing this are the same ones charging you 15% interest on a used car.